Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate finance. And let me tell you today, we've got a big one from Timberland Bancorp. It is their quarterly report, and get ready because we're diving deep into what these numbers mean for the bank and for you. Before we dive in, if you appreciate getting straight insights from these dense documents, smash that subscribe button and ring that notification bell. We also have a Discord community linked in the description below where we break down more filings like this and chat about investing. Alright, let's get into it. Timberland Bancorp filed their Form 10Q for the quarterly period ending the 31st of December 2025. This is essentially a mid-year checkup on their financial health. Now keep in mind, Timberland Bancorp is the parent company of Timberland Bank, so most of what we see here is the bank's financial story. First up, the consolidated balance sheets. Think of this as a snapshot of what the company owns and owes at a specific moment in time. On the 31st of December 2025, their total assets were about $2.006 billion. That is a slight dip from the previous quarter. Now, what makes up those assets? Well, a big chunk is their loans receivable, which stood at a hefty $1.458 billion after accounting for potential losses. Deposits are their main funding source, totaling over $1.7 billion. That is a lot of money from customers. Now let's look at their actual performance, their consolidated statements of income. For the 3 months ending the 31st of December 2025, Timberland Bancorp reported a net income of $8.216 million. That is a solid increase compared to the $6.860 million they reported for the same period in the previous year. This means they are making more money than they were before. A huge driver of a bank's profit is net interest income. This is the difference between the interest they earn on loans and investments and the interest they pay on deposits and borrowings. Timberland Bancorp saw their net interest income climb by about $1.98 million or 11.7% to $18.95 million for the quarter. This tells us they are either earning more on their loans, paying less on their deposits, or both. The report mentions that asset yields increased due to higher rates on new loans and adjustable loans repricing, which is good news for their income. Banks have to set aside money to cover potential loan losses. This is called the provision for credit losses. Timberland Bancorp actually had a recapture of credit losses of $35,000 for the quarter. This means they actually got some of that money back or expected fewer losses than they previously thought. This is a positive sign, showing that their loans are performing better than anticipated. Beyond just interest, banks make money from fees, their total non-interest income, which includes things like service charges on deposits and ATM fees, increased slightly to $2.764 million. This is a steady stream of income that complements their core lending business. On the expense side, salaries and employee benefits went up by about $361,000, which is typical as companies grow and give raises. Premises and equipment costs also increased, partly due to opening a new branch. Overall, non-interest expenses went up by $364,000. Looking at earnings per share, which is a key metric for investors, their diluted earnings. Per share was $1.04 for the quarter. That is up from $0.86 in the same quarter last year. This is generally seen as a positive trend for shareholders, as it means the company is becoming more profitable on a per-share basis. Now let's dig into their investments. Timberland Bancorp holds investment securities. Some they plan to keep until they mature, and others they are willing to sell. The report shows their held-to-maturity securities had a book value of about $133 million and a fair value of around $129 million. For their available-for-sale securities, the book value was about $75.5 million, and their fair value was also about $75.2 million. They also report unrealized losses on some of these securities, but they believe these are temporary and related to market fluctuations rather than actual credit issues with the investments themselves. Let's talk about loans. As of the 31st of December 2025, their total loans receivable, after accounting for losses, were $1.458 billion. The biggest chunk of this, about 88.4%, comes from mortgage loans. This includes 1 to 4 family homes, multifamily properties, and commercial real estate. Commercial real estate loans make up a significant portion, about 38.9% of their total loan portfolio. A critical indicator of a bank's health is its non-accrual loans where the borrower isn't making payments. At the 31st of December 2025, their total non-accrual loans stood at $4.284 million. That is a small percentage of their total loan portfolio, which is generally a good sign. They also track loans that are past due but still accruing interest, and in this case, that number was 0. Looking specifically at their commercial real estate loans, the largest segment by collateral is industrial warehouse properties, followed by medical dental offices and office buildings. This breakdown gives us insight into where their risk exposure lies within the commercial real estate market. Finally, let's touch on their capital. The bank's capital ratios are very strong, well above the minimum requirements to be considered well capitalized by regulators. This means they have a good cushion of capital to absorb potential losses and continue lending. Their common equity tier 1 capital ratio was a very healthy 19.86%. So, what is the story here? Timberland Bancorp, primarily through Timberland Bank, is showing solid financial performance. Their net interest income is growing, and they're managing their loan portfolio well, indicated by a small number of non-accrual loans. They also have strong capital reserves. A key strength is their diversified loan portfolio, though a significant portion is tied to commercial real estate, which will always have its own risks depending on the economic climate. Their focus on core deposits is also a stable funding source. Looking ahead, the main risks would be any significant downturn in the economy, especially in their core markets in Washington state, which could impact their loan portfolio. Rising interest rates or a sharp drop in rates could also affect their net interest margin. But based on this report, they appear to be navigating the current environment quite capably. Alright, that is our breakdown of Timberland Bancorp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord linked in the description. Thanks for watching. See you next time.